welcome. Thank you for coming to the webinar this morning on fire insurance in California. I put this together not that long ago, but I will tell you that when I first was putting it together, I thought this was the big issue to deal with because of the situation with obtaining fire insurance in California. And who would have thought that something would have dwarfed that issue, and as it has, and we're dealing with this pandemic. But getting fire insurance in California still does have its challenges, and I wanted to take the next hour or so max to try and give you an update on where we are as an industry, where we're going, and what you can be doing at this point right now. So you should see the main slide on the screen, which shows the house on fire with the firemen. Can somebody just either give me a thumbs up or confirm that you do in fact see that, and then I'll jump right in. Great. Okay. Well, just so you know, I'm Karl Susman. I'm with the Susman Insurance Agency, and this presentation is for you. We have a combination of clients, real estate professionals, attorneys, and pretty much a mix of everybody that's looking to see what exactly is going on in the industry right now. So you know what to expect today. We're going to be having a brief agenda just so you can see it. The first thing I'll let you know is what you're going to learn, which is the whole point. What is the point? We're going to be here today. You're going to learn about why we need fire insurance. We're going to learn about where you can get fire insurance. What do different types of insurance policies that cover fire insurance cover? Why is it difficult to get fire insurance today? How the insurance industry is responding to the losses, what to expect from the fire insurance market, and then at the end we'll go through questions and answers. So very basic, very straightforward. And again, if you have questions as we go, you can type them in the box, and I'll either, if I happen to glance, if you see me going over here, I'm looking at the box. If I don't answer it right away and I take a break to take a sip of tea, I'll try and jump on your question. Otherwise, we'll catch it at the end. Like I said earlier, I'll stay on as long as necessary to make sure that we address all of the questions that we have. So the first fundamental question is, well, why do we need fire insurance? Well, break it down into two primary reasons. One is to protect our property, and the other is because we have to, because lenders require that we have fire insurance. In California, the estimated population as of July was about 39 million and change. Of those, about 54% of households own their homes. It's roughly 20 million people in the state of California that are in need of fire insurance. Fire insurance does a lot. It protects single-family homes. It protects your personal property. It protects rental properties, commercial buildings, commercial equipment. Again, lenders require that you have fire insurance, which makes sense because that's protecting their collateral, right? They're giving a loan to purchase property. They want to be sure that if the property is damaged, that there'll be coverage for them to get their collateral rebuilt. Without fire insurance, lenders won't loan funds. And as you probably can imagine, that stands to reason that California real estate market is strongly connected to the fire insurance availability, since lenders will not lend without having fire insurance in force. In California, the real estate market contributes about $350 million to the almost $2 trillion economy in California, which is almost 20%. So when you're talking about why is it important, or why is it necessary that I pay attention to what's happening with fire insurance? Well, it's 20% of the California economy. It's pretty important. So let's start out. Where do we get fire insurance today? Well, the first place we get them is from private insurance companies. That's what you think of when you think of getting a quote for fire insurance. You'll call an insurance company or an insurance broker, and you'll get a quote. You'll be getting a quote from either an admitted insurance company or a non-admitted insurance company. Some examples of admitted insurance companies, you've probably heard of a lot of these: Travelers Insurance Company, Mercury, Hartford, Safeco, Nationwide. And just for simple definition's sake, an admitted insurance company is an insurance company that's been approved to do business by the state of California Department of Insurance. They're admitted, they're licensed. That also means that they follow guidelines that the California Department of Insurance puts out. Non-admitted insurance companies, a non-admitted insurance company is not licensed to do business in the state of California by the Department of Insurance. However, they are regulated by the department. They are regulated by the State Surplus Lines Office. So there's a fine line between an admitted company, between a non-admitted company being just the Wild West doing whatever they want. They are regulated by some state, I hate to say bureaucracies. They're watched over. Some examples of companies you may have heard of, Aspen, Lexington, Scottsdale, Lloyd's of London. Everyone's heard of Lloyd's of London. That is actually a non-admitted insurance company. If you're curious, of the admitted insurance companies in California, who has the most homes insured? What's their market share? Anyone want to guess? Who has a lot of insurance in California? Who would guess has the #1 most homes and properties insured in California? Anybody? I got one for State Farm. Anybody else? Travelers? Well, turns out, in fact, it is State Farm that has 18% of the California market share for fire insurance, followed by Allstate, then Liberty Mutual, USAA, Farmers, and then Travelers. But of course, the big question is there anywhere else to get fire insurance? And of course, other than that, the answer is yes. And other than that, meaning other than admitted and non-admitted companies. So where else can we get fire insurance? We can also get fire insurance from our friends at the California Fair Plan Association. Now let's talk a little bit about the California Fair Plan Association. The Fair Plan stands for Fair Access to Insurance Requirements, and it was created in July 1968 following the 1960 brush fires. That's long before most of us were born, right? Right. Okay. The Fair Plan is an insurance pool established to assure the availability of basic property insurance to people who own property in California and for reasons beyond their control have been unable to obtain insurance in the voluntary market. Okay, what does that mean? That means they've tried going to all of these admitted insurance companies and for some reason beyond their control, they're not eligible. Then they're able to go to the California Fair Plan. The Fair Plan has no public funding or taxpayer money, and it is not a state agency. The Fair Plan, it's stronger than any one insurance company because it's backed by the capital of every admitted insurance company in California. So when you see State Farm has a certain percentage, 18% of market share, and you add every other insurance company that's admitted in the state of California, you can imagine there's a lot of capital that's backing those companies. If you take all of those companies and put them together, that's the amount of backing that the California Fair Plan has, because all of the people, all of those companies that are writing admitted business in California are backing the California Fair Plan. This is by statute. Policies are issued on behalf of member companies, and each company participates in the profit, losses, and expenses of the Fair Plan based on their market share. So if there's a brush fire that burns down a lot of homes that are insured with the California Fair Plan, in essence, State Farm would be paying 18% of those losses. Picking on poor State Farm, but they were the first ones up there. So how do you get a California Fair Plan policy? A couple of different ways. You can get it through an independent insurance agent. You can get it through a captive insurance agent, or you can get it directly from the Fair Plan. So that's Fair Plan. But jumping backwards a little bit, let's talk about homeowners insurance, since when we think about fire insurance, we think home insurance, even though they're not the same thing. They're not synonymous. So what are some things that homeowners insurance policies cover? I'll throw that out to you while I have some tea. Just type them in the box. What are some things that you think of when you think of homeowners insurance, and what type of things do they cover? Losses for what? So we've got liability, tree falling on your house, water damage, theft. These are all good. Well, let's go through at least an almost exhaustive list quickly. We do have fire and lightning. We have freezing, although we don't see a lot of that in California. Aircraft damage, believe it or not, if a plane crashes into the house, and if you're watching the news, that could be Harrison Ford crashing into your house, it seems. Damage by water, theft, medical payments, windstorm or hail, damage to property of others, falling objects, smoke, explosion. There's our general liability coverage. Weight of snow or ice, again, not so big in California. Workers' compensation, electrical current damage, riot, vandalism, and damage by vehicle. So this is not a complete list, but this, when you think of homeowners insurance, you get all of these things. If we bounce back to the California Fair Plan, let's see what it covers, because it's a much smaller list. Now, remember, the Fair Plan is not designed to be the first place to go. It's supposed to be the last place you go when you can't get coverage elsewhere. So what type of coverage do you get from the California Fair Plan? What does it actually cover? Basic coverage. You get fire or lightning, smoke damage, internal explosion, windstorm, hail, riot, aircraft, or vehicles. I always get a kick out of aircraft. How often do you think there's damage from an aircraft? Apparently it happens. It's in all these policies. Vandalism or malicious mischief. That's it. So if you're purchasing just the California Fair Plan, that's all you're getting. Much smaller than that list with all those little boxes that we just went over. So is there a way for us to get a California Fair Plan policy and then somehow pick up the rest of our coverage somewhere else? We can. Let's talk about that briefly. There are companies that will write policies that go in conjunction with the California Fair Plan. It's called a DIC policy. Just two companies that do offer these policies, Safeco Insurance and Travelers. A DIC policy standing for Difference in Conditions. It's described as a policy that consumers purchase in conjunction with the California Fair Plan. So you're purchasing the basic coverage from the Fair Plan, and then everything else would be covered under this DIC policy. A DIC policy you can look at as being a homeowner's policy with the peril of fire carved out. So if you look at this cute little puzzle piece, this was actually taken directly from the Fair Plan as an example of how to explain a DIC policy. The Fair Plan policy will cover, for example, the fire, the internal explosion, and the windstorm, and the difference in condition policy will cover the other things like water damage, theft, and liability. Make sense? So if you're in an area that has a high fire exposure, it would make sense that you would get the fire insurance through the Fair Plan because nobody else wants it, but other companies will be able to write the other coverage for you. So you put the two together. You get the fire from the Fair Plan, you get everything else from the DIC policy. So if that's the case, why is it that right now it's difficult to get fire insurance? Well, the main reason is wildfires. In 2015, here's some stats for you that are kind of scary. I won't read all of the numbers, but you'll get the idea. This is showing almost 1 million acres that burned due to wildfires, 8,200 individual fires, 3,100 structures, 7 fatalities. In 2016, 669, 534,000 acres burned, almost 7,000 wildfires, 1,200 structures. In 2017, we jumped up to 1 million, almost over 1.5 million acres burned, almost 10,000 wildfires, 47 people died, and over 10,000 structures that burned. Keep going, 2018, almost 2 million acres, 24,000 structures have burned. And in 2019, 732 structures burned. If you look at this and you say, well, okay, there's a fire every year. There's a wildfire every year. As a matter of fact, there's thousands of wildfires every year. So what's the problem? That's what insurance is for, right? Well, yes and no. Insurance is there to protect for the potential of a loss. When you have losses year after year after year after year, it's no longer a potential for a loss. It's almost a certainty of having a loss. And it's pretty difficult to insure for a certainty of a loss. If you were going to gamble on, let's say you were in Vegas, which sadly we won't be going for quite a while it seems, and you were playing roulette and you were playing the table and you were going to bet on the black or the red, well, is that roulette? Yeah, I think that's roulette. No, that's not roulette. That's, no, I'm getting, you can tell I'm not a gambler. Anyway, if you knew for certain that it was always going to fall on the black, always, you'd never bet on the red chip, on the red color. So forget my analogy that I've horribly destroyed. Let's talk about what this means to the insurance industry. In '97, the average homeowner's claim was about $2,600. In 2003, that claim jumped up on average to about $8,700. So the claim frequency, meaning how much is each claim costing, is going up every single year. The severity is going up every single year as well. I have that backward. The frequency is that we have a claim every year. The severity is that they're large claims every single year. These brush fires that you hear about, the Getty fire, the Woolsey fire, all of these, those are what the insurance industry calls 10-year events, meaning that they price their policies expecting that every 10 years or so, something massive like this is going to happen. Unfortunately, like you saw from the graphic earlier, it's happening every single year. If you imagine that, how do you price a product when you know there's going to be a loss? One of the reasons for this is climate change. And a lot of the actuaries and the insurance models that have been used in the past to predict these wildfires are no longer applicable because of the changing environment that we have. So the question is, we see this is happening. How, in fact, is the insurance industry responding to all of this? Unfortunately, we've all seen, if not handled and had to deal with this personally. Insurance companies are non-renewing homes that they're considering to be in a high brush area. And the definition of high brush is changing as well. There is no universally recognized definition of brush. What one company says is brush, another company says is not brush. So be careful when someone says, I'm in a brush area, because that doesn't necessarily mean that they're in a brush area for everybody. They might be in a brush area for one particular insurance company's appetite. State Farm, the largest in the state, and others declined to renew over 350,000 policies. That's just for starters. The California Fair Plan has rates increasing over 20%. Again, when there's losses and the losses keep happening, rates have to go up to try and offset those claims. Admitted insurance companies are filing for rate increases, and non-admitted insurance companies, since they don't have to file for rate increases, are increasing their premiums by up to 500% or more. It's not unusual for somebody that was paying, I'm just picking a client in my head that I know we had to work with, they were paying about $4,200 a year for their policy with Lloyd's of London. And when Lloyd's renewed it, it was a mere $18,000. The problem is they can't go without insurance, and no one else wants to write them because they're in a high fire risk area. So what happens? The government's going to step in to try and work things out a little bit. Governor of California in October declared a state of emergency based on this. The insurance commissioner enacted new guidelines saying that if you're in an area that has been hit by a wildfire, that the insurance carriers are not allowed to non-renew you for a period of a year. It's something, but it's just a year. And insurers cannot non-renew risks if they filed for a rate increase. So if an insurance company is saying, hey, we just need to raise our rates, they can't say we need to raise our rates, but meanwhile we want to get off of these risks as well. You can't have it both ways. So the insurance companies begin to tighten their guidelines on what they're willing to write and what they're not willing to write, which translates into they're going to write further away from areas that they think are at a higher than average risk for fire. So the Department of Insurance said, okay, we're gonna deal with this. Instead of the FAIR Plan just offering fire insurance, what if we said that the FAIR Plan has to offer everything? They basically have to offer a homeowner's policy. So in November, the California Insurance Commissioner ordered the FAIR Plan to begin offering what they were calling expanded coverage under a DIC policy that would offer additional coverage like water damage, theft, liability. And they asked the California FAIR Plan to increase their total limit, which currently is at $1.5 million, up to $3 million. Just a little explanation. The California FAIR Plan's limit of $1.5 million does not mean that's the most they'll insure your dwelling for. What that means is that's the most they'll pay for any location, period. That means that's the most they'll pay for the dwelling, the personal property, the cost to move out, everything rolled up into one limit. $1.5 million is the maximum that they'll take. And they want the FAIR Plan to take credit cards, which I'm proud to say actually went into effect May 1st. So people can now pay for the FAIR Plan with a credit card. What could go wrong? What is the insurance industry? How are they going to react to basically having the FAIR Plan offer homeowners policies? Remember, the FAIR Plan is backed by the insurance companies already. So here's what happened. The California FAIR Plan filed a petition basically saying, you can't have us do this. This will tear the entire marketplace apart. You can't have the location of last resort, the FAIR Plan, where people go when they can't get insurance from an admitted company, writing that same policy and have the admitted insurance companies paying for it. Again, it was worth quoting. The FAIR Plan was created to assure the availability of basic property insurance. That's what's in their charter. The commissioners call for the FAIR Plan to offer liability coverage, and an HO3, which is a type of homeowners policy, would have unintended consequences that could ultimately hurt consumers. They additionally said that their charter was not to do this. So anyone want to guess what the court said? This went to court. Anyone? Come on, it's an easy question. They agree or they disagree? Anyone? The Superior Court said, you're right, you can't do that. FAIR Plan, you were designed to write fire insurance, and that's all we're going to let you do. So now we're back to the same problem. The admitted insurance market is tightening their guidelines. They're filing for rate increases. What do we expect at this point? So here's what I would expect. Private insurance companies, again, I put this slide in here, even though I think I already addressed it. They're not nonprofit corporations. If they can't make a profit, they're not going to participate. And I'm not trying to, toe the company line, but it's just a fact of life. In the way our industry works, private insurance companies need to make a profit. If they charge $1 for premium and they're paying out $10 in claims, they're not going to do it, right? So it's not fair, or well, they've made all their money after all of these years. They literally will run out of money. You can't take $1 in premium and pay out 10 or 20 or 30 or 50 or 100 indefinitely. I mean, that will run out, and they're trying to prevent that from happening. Again, I mentioned this earlier, the concept of insurance is the probability of a loss, not the near certainty. I would expect the California FAIR Plan to raise their limit to $3 million. They have begun taking credit cards already. The $3 million limit should probably come out in the next 3 weeks. It was scheduled for May 1st, but with everything going on, it's delayed. So we're thinking probably around June 1st at this point. FAIR Plan will also continue to raise rates to offset the claims and the losses that are happening. And unless they're prevented legally from doing so, companies are going to non-renew risks that are in areas that have had fires. Because again, you can't collect enough rate when you know there's going to be a fire, right? The California Department of Insurance will probably continue to approve rate increases from admitted insurance companies. Don't forget, they can approve the rate increase knowing that the carrier can no longer non-renew that risk. And the non-admitted companies will continue to raise their risks and cherry pick what they're willing to write. All insurance companies will become more selective with the type of insurance policy they're going to write. And all insurance premiums across the board will be going up. So in summary, there's still going to be, at this point, less fire insurance available with higher premiums. One last thing I want to mention before I conclude and start taking questions, if there are any, is what will happen when the California Fair Plan raises their limit to $3 million. What will happen is most of the carriers that are offering those DIC policies, remember the policies that go together with the California Fair Plan, they will also raise the limit of what they're willing to accept. So now larger homes will be able to get fire insurance from the California Fair Plan and be able to purchase a DIC policy to go along with it. So that's going to go a long way to alleviating some of the pressure that's building up, because as it is right now, with $1.5 million for total coverage with the Fair Plan, that goes for a relatively small home in order to get coverage for it. Seems like a lot, $1.5 million, but again, you have to remember that's structure, other structure, personal property, loss of use, everything gets bundled into that amount. So once that limit hits $3 million, that's going to open up the property insurance market in one way, because you're going to get larger homes that can now purchase Fair Plan. And hopefully, my understanding is that the private insurance companies will also respond by raising the limits for DIC policies that they're also willing to write coverage for. And that pretty much does it. I left time at the end if anyone has questions. Now's the time. You can type it in the question box, and I'm happy to answer any questions that you have while I have some tea. Okay, first question, what's the one thing that I'd like you to take away from this webinar? I think the most important thing is to stay informed, especially if you're in the real estate market and you're dealing with clients, and they, of course, when they're purchasing homes, they need to obtain fire insurance, is stay informed and make sure that they know they need to start a little earlier in the process to obtain insurance. And also, they should not assume that just because the current owner of the home might have one policy that they can get it. And they shouldn't assume if they've heard that the area is in a fire zone that it is, because again, it's very different between companies. Every single company, I guess if I could think of one mantra for you to leave with, every insurance company, admitted and non-admitted, has their own granular guidelines for how they determine whether they're going to write a risk or not. There's no globally recognized underwriting process that companies go through when they decide whether they'll write fire insurance on a home or not. Another question, what percentage of rate increases do I expect? Well, we've seen the Fair Plan take over 20%. We've seen the non-admitted companies taking literally 500 or more percent. The admitted companies are a little bit slower because the way it works, the reason I mentioned the 6.9% increase, carriers can request an increase up to 6.9%, and they have to provide certain documentation to justify why they need that increase in premium. They have to literally show we have claims that support that increase. If they request higher than 6.9, it becomes a longer, more drawn out process. So I would anticipate every admitted company to file for that 6.9% increase. And the minute it's approved, to file for another one. And the minute it's approved, to file for another one. Because actuarially, they have claims that support these rate increases, and they'll continue to push those forward. Another question, does the Fair Plan cover homes in WUI areas? I believe that's an unincorporated area. I'm not sure what the W stands for, but I recognize the expression. If that's an unincorporated area, the answer is yes. And there are also some admitted companies that will, and there are non-admitted companies as well that will write in unincorporated areas. They'll ask certain things about water supply and distance to the nearest fire station, and if it's a volunteer fire station, but these are certain questions that will come up specific to the home and the location that it's in. Sorry, well, it looks like it's the wildland urban interface. I'm not familiar with that term at all. I will look it up and see, but I can tell you as a general statement, the FAIR plan will write everywhere. So I will look up the wildland urban interface and see what that is, but I can tell you that if it's in California, FAIR plan will write there as well. Thank you for that. I'm interested to see what that's about. Asking if I have any projections about possible fires this year. Let me get to my crystal ball. You know, the industry is desperately trying to figure out how to be able to predict that. And based on the weather patterns and climate change, I mean, it's way above my pay grade to try and give you an idea if I think there'll be a wildfire season this year or not. If I were a betting man, which based on my analogy, I'm clearly not, I would say that we're going to continue to see some pretty significant wildfires this year because we have every single year, unfortunately. Another question, this is probably from a real estate agent. If they're getting a listing that's in a canyon, is there anything they can do to help the buyer? Absolutely. The best thing to do is to get the insurance lined up sooner than later. It used to be that you could wait till the day before escrow closes, boom, 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 and you could put something together. If it's in an area that realistically you can look at, and anything that's in a canyon is probably going to be considered above average for fire risk, then start the process earlier. Have your client contact an insurance agent or broker, give them the address, have them check with their admitted markets, have them check with their non-admitted markets, have them see if there's an option for the California FAIR plan with a DIC put together. But the most important thing is start the process sooner than later because it takes a little bit longer sometimes. I've got some other questions on this screen. Let me move this over. First question, do most companies offer DIC policies? Unfortunately, no. I would say an almost complete list would maybe be a dozen that I'm aware of. There might be some smaller companies that I haven't heard of that offer them, but for the most part, it's pretty much tied down to a lot of the more mainstream companies. Like I said, Travelers, not Liberty Mutual, who owns Safeco, think companies like that. Another question, in Portola Valley, do I know an insurance company best to approach for fire insurance? I don't know that area specifically, but back to what I said earlier, the most important thing is there is no one company that's going to be good for every area. And there's not even one company that will be good for one area all the time. The carriers are getting much more sophisticated projections. They're literally able to look at the house on satellite. They're able to check to see how far it is from brush. They're able to check to see how many homes stand between the brush and this particular house that we're looking to get insurance on. They have formulas that will tell them how wide the roads are. Can a fire truck get there? Or do the smaller fire engines only have the ability to get there? It's unbelievable how many factors that go into the determination now with regard to if they'll write fire insurance or not. And it's a moving target. I can honestly tell you a week does not go by where we don't get updates from one insurance company at least on how they've changed the guidelines that they're going on based on whether they're writing fire insurance or not. We will literally check the same property address with every company over and over and over again because their guidelines are constantly changing. What else do we have? Someone's asking for some screenshots and a recap. I'm happy to send you the presentation. If you want to shoot me an email, I'll just respond to it. Or if you want to type it in the, well, I guess you don't want to send that to everybody. If you want to just reach out to me directly, I'll be happy to send you the screenshots from this. Again, you're mentioning two of the main things, the FAIR plan going up to $3 million. And again, we talked about some of the carriers that do DIC policies. I can actually get a complete list of companies that are filed with the Department of Insurance for DIC policies. The problem with doing that is that that does not include non-admitted companies that also write DIC policies. They write them as well. Someone is asking specifically about Mandeville Canyon. Mandeville Canyon is, for those of you who don't know, is an area north of Sunset Boulevard. And the insurance industry has a bit of an on-again, off-again love affair with Mandeville Canyon. There's times when some of the smaller companies will say, you know, we haven't seen a fire there in a while, we'll write something, and they gobble up the business for a while, and then it stops. And they say, nope, we don't want it anymore. There was a fire in Bundy Canyon, that was too close, and then they stop. Same mantra is there's not one specific company that I can say will write in Mandeville Canyon. The good thing is that there are carriers that will write there. They'll write DIC policies around the FAIR plan, and there are non-admitted companies that will write policies there as well. So if the home is of more, I say regular size, you know, 2,000, 3,000 square feet, then you'll be able to write a FAIR plan policy with a DIC policy all over Mandeville without a problem. And once the limit goes up to $3 million, we'll be able to write larger homes with larger DICs. But the good news is there are options for Mandeville Canyon. Another question, if a buyer wants to use the same insurance company that the seller has, can that insurance company increase it even though the current seller has the same policy? It's a great question. We get asked this with a lot of frequency. Just because the seller of a house has a policy, number one, insurance policies are not assumable. So they might have that policy from years ago and they won't write it again. So a buyer cannot take over an insurance policy from a seller. So they would have to buy a new insurance policy. And even if they went to the same insurance company that the seller currently has, there's no guarantee that they'll be eligible or that they'll write that policy or what the rate will be. Another question, north of Sunset, if it's loosening up, same thing. Some companies, yes, some companies no, depending on the size of the home. The best thing to do, and feel free to reach out to me on this, it doesn't take us more than 20 minutes, is we'll put the address into our system and it will check with dozens of insurance companies and it'll tell us who's writing, who's not. Can we do a FAIR plan? Who would write a DIC on it? So the good news is that there are options. Where it gets a little trickier is when you're looking at very large homes that are in the brush. There's 3 or 4 large homes that we have insured that have $14, $15 million on just the structure alone, and they're in the hills. Those are difficult risks to get. They're far too large for the FAIR plan. They're far too large in general for a lot of the admitted markets, and the non-admitted markets are really just going, we know we're the only place to go, and the premiums are tough. But if you have a home that's under 5,000 square feet, I'm just going to pick that number-ish, then it's not going to be, especially once the FAIR plan has that higher limit, it's not going to be as difficult to obtain insurance policy on those properties. Another question, do lenders all accept the FAIR plan? That's a great question. The California FAIR plan, as we now know, only covers fire insurance. And legally in California, lenders can only require fire insurance as collateral. Now, sometimes I've been asked, well, my lender wants me to get earthquake insurance. That's nice, but legally they can't force you to do it. So to answer your question, yes, all lenders will accept the California FAIR plan because it does provide fire insurance. And now we all know the FAIR plan has more financial backing than any individual insurance company anyway. So it would not make a lot of sense for them to decline it. If you have a lender that's giving you a bad time about the FAIR plan, it's probably time to get the broker on the phone with the lender or escrow to try and help them out. How difficult is it to get fire insurance in Malibu? Again, it's going to be more specific based on the house. Properties are being written in Malibu, a lot of them with the FAIR plan and a lot of DIC policies. A lot of the admitted insurance companies are not writing standard policies in a lot of areas in Malibu. Some are, but they're the smaller carriers that you might not have heard of. And then you have to make a decision. Do you want to go with an insurance company that might be smaller but willing to take the risk, or do you want to pay more, have the FAIR plan and a DIC policy with a carrier that you're more familiar with. That's really up to each individual. Personally, we like to give people the option. I tend to like to go with the more stable carriers because in the event of a claim, it's a better feeling when you know you're with a company that has some real backing behind it. Another question, how high does a DIC go? It's a great question. DIC policies have to match the limit that's on the California FAIR plan. So if we're insuring the dwelling, let's just say on a FAIR plan policy for $1 million, then the DIC policy also has to be listing the dwelling at $1 million. Even though it's not paying for fire, let's say there's some other type of peril that requires the property to be rebuilt, the replacement cost is the same. I have this discussion with clients sometimes about earthquake insurance. They say, well, why do I have to insure my home for earthquake insurance for the same amount that I insured for fire insurance? And the answer is, it's going to cost what it costs to rebuild your home, whether it burns to ashes or falls to sticks and stones. So DIC policies have to match the limit with the California FAIR plan. And most carriers, I've heard from 3 specifically that have already committed that whatever limits the FAIR plan go up to, they will also raise their DIC limits to be able to match. So as far as larger estates on Mandeville, I think depending on how large we're talking about, we'll either be able to write the FAIR plan with a DIC or then go to the non-admitted market as well. Switching windows back to a different spot for questions. Are there any restrictions on the cost issued? Okay, I think I see what they're asking. Someone's asking basically, are there restrictions based on what you're quoted and what's put on the binder versus what the insurance company inevitably decides to charge for the premium? And I get that question. This is what happens. And this really has to do with the broker. I hate to say it. Carriers are allowed to have their agents issue a binder, which basically is proof that there's coverage in force and provide a premium. Now, a lot of times, what I'll see happen is someone will come to me and they'll say, well, I got this binder, but then the policy was, twice the cost. Well, that's probably because, I don't want to say it was more of a bait and switch, but the agent gave an estimate and the carrier went out and did the inspection and they said, no, it's going to cost more. There's no specific guideline on that. Binders are usually only good for 30 days. So you need to, get the actual premium within that time frame. But again, this is more of an issue of the agent you're dealing with and the insurance company. Most of the larger insurance companies, their binders are spot on because everything is done electronically. We're not issuing binders with our guesstimates. We're issuing binders based on the actual decided factor and premium that's already provided to us by the insurance company. Covered that, we covered that. Question about fire safe councils and FireWise communities. For those of you who aren't familiar, FireWise is was one of the answers that the industry and the state Department of Insurance has been coming up with to try and help reduce the risk of fire in communities. And they set forward guidelines for what needs to be done to an area to make them less vulnerable to a wildfire. Things like sealing off the the vents and putting certain spark arresters over the chimney, all sorts of different things like that. And right now, the carriers have not yet gotten to a point where there's enough statistical significance to know if that's going to help, but they're definitely on board for whatever options are out there to try and reduce the exposure. So I have no doubt that once those become more familiar and once more communities and more areas are saying, hey, we're going to file to be a FireWise community, that there'll be discounts available for that. Or it very well might be that an area that's FireWise is eligible and an area that's not simply is not eligible for coverage with a certain company. I think we're going to be seeing a lot more of that happening as well. Any other questions? Let me see if I missed any. I don't think so. I think that's it. If any of you want, like I said, would like to get a copy of the PDFs, I'm happy to send them to you. Just reach out to me individually. I appreciate you all coming. Stay safe, stay inside. These are tough times, but you know what? We've gotten through it, and we've gotten through worse before. I really believe that. And I think if we stick together and we all do the right thing, we'll get through this as well. If you have questions, as always, feel free to reach out to our office, Susman Insurance Agency. You can speak with any of us. All of our licensed agents are excellent. You can reach out to me individually as well. I'm also happy to help. And with that, believe it or not, we are, what is that, about 47 minutes in. So we went through this pretty fast, but I think you got a lot of information. And again, if you have other questions, just don't hesitate to reach out.